Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, makes it 4 o'clock in New York. Markets are closing for the morning session with triple-digit gains in the Dow Jones Industrial Average, trading up 168 points at 17,888. Interesting number for our close. Now, we've seen a trade to a low of 719 and a high of 895, so we are literally just off of the highs on today's trading range, and more importantly, we're back in rally mode. And when we look at the most recent rally, we are looking at this 18,000 mark with great contempt, because we are now within striking distance of that. Just 120, less than 120 points shy of that. And it is very, very, in my opinion, achievable at this point. Of course, next month we find out whether or not the Fed is going to implement the first rate hikes in quite some time. And I believe that we're probably going to see some sort of a Christmas rally into new highs. That has been my underlying assumption since we have put on our last trade. Of course, we're long Standard & Poor's 500 vis-a-vis the E-mini at 2023, and so we've got some great gains on that today. Let's look at a couple other markets before we go to that. First, we'll take a look at the dollar, which is a little softer on the day, off almost 0.4%. More importantly, it is below 100 again. As you can see, when we look at this particular chart, it's a weekly chart, standard candlestick format. We can see the occasions quite easily in which the market traded to and just briefly above 100. Of course, this is a weekly chart, so you can see that during this week it closed above it. It opened above it the following week, but never saw it again. Tested it one more time here before trading lower down to the support level that it found roughly at about 93 on the dollar index. Again, we've seen the market come in. We had the market take out 100 yesterday, but certainly could not sustain any kind of a close there. Crude oil trading in essence unchanged, literally unchanged. As you can see, it's switching from red to green, but now it's up 2 ticks on the day, but 41.67, that's the current print. And that takes us to our current trade, which is long the Standard & Poor's at 2023, market at 2100. So we've got over 75 points on the trade right now. Whether or not we find a little bit of resistance is going to be interesting, but the first chart that we'll look at is this 240-minute chart, because the short-term charts give us a much more eloquent and adequate way of looking at these most recent highs. 2109 is a high, so we are just shy by about 9 points of this most recent high that came in November. So that is absolutely achievable at this point. But what we really want to know is how it's going to handle if in fact we see it trade back to the record or all-time highs. Now we'll want to look at a daily or weekly chart, but we're not going to get true prices, of course, if we look at it in a Japanese average. So let's go ahead and convert this, which is exactly what I've just done. And we were just looking at this particular top right in here. And of course, that is just shy of these record tops that are sitting up here. And so in terms of striking distance, let's say, from these record tops, which I'll try to put it in as straight as I can, come in here, I believe 2130, somewhere in that area. So we're pretty close to that. And as I said before, my belief is that we're probably going to come in and see this market make new highs. So lastly, I do want to take a look at our daily chart. This daily chart is still in Japanese average format, so you're not seeing true prices. 2092, market's trading between 2100 and 2099 right now, but we can really see a couple of things. The first thing is, in terms of strength of this current trend, it's not incredibly strong. You're not getting very, very large body candles such as you saw here, or even in the middle of this rally here. You can see that here. And on the downside, you can also see large body size. So we're not really getting large body size. We're also getting upper and lower wicks. So it's not a fully convinced and convicted rally right now. There's not 100% all in, so to speak, but we are slowly clawing ourselves up to higher pricing. And so the question comes in, we've got our current trade, and that current trade, of course, is sitting at 2023. The stop that we have is currently just below our 200-day moving average. I've just gone ahead, I've pulled up a daily chart, Japanese average format, so current price is not our actual price, but our stop is sitting just below here. As I said yesterday, you can move it up into this area, which sits around 65, but we've kept it very loose. Let's see how the market reacts as it comes up and attempts to test those record tops. Let's go ahead and convert this back. And now we get a true rendition of what the market looks like. But we've got these tops right up here, 2103, 2109, I should say. These are the tops here. Then we've got our record top. This is before the meltdown. This comes in at 2134. So let's just see if we're going to make a play for this area, because my sense is that if, in fact, we do make a play for this area and break out of these tops here at 2108, we're going to want to put our stops right under here, so that if it does come and test these record highs 100 points away, we've got a good lock on the market, because at that point we're locking in the differential between 2023 as our buy price and call it even 2100 as our sell price right in here. That's a 75-point gain and at $250 a point for the mini and $2,500 a point for the large S&P contract. And we do have a couple of subscribers that trade that. There's some really healthy profits in there that we want to protect. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.